Welcome to the World News Updates news channel. Stay up to date on what's happening in the world. In response to concerns about the health of the banking system, a group of big U.S. banks injected $30 billion into a smaller regional bank, First Republic, which had been seen as at risk of failure. This move was seen as a positive step by U.S. regulators, who called it most welcome, while the banks said their action reflected their confidence in the banking system. However, concerns remained as the San Francisco-based firm had seen its share price plunge nearly 70% over the last week, as investors worried it was the next bank at risk of a rush of customers withdrawing their deposits. Problems in the banking sector surfaced in the U.S. last week when Silicon Valley Bank collapsed in the biggest failure of a U.S. bank since 2008. That was followed 2 days later by the failure of New York's Signature Bank. Authorities stepped in to guarantee deposits beyond typical limits in an effort to head off further runs on bank deposits, but financial markets have remained jumpy. In a sign of strains in the system, the U.S. Central Bank reported a surge in emergency lending to banks, with $318 billion in outstanding loans as of Wednesday, up from $15 billion a week earlier. That included roughly $12 billion offered through a fund created after the Silicon Valley Bank collapse. The moves by central banks to sharply raise borrowing costs over the last year to try to curb inflation have hurt the values of the large portfolios of bonds bought by banks when rates were lower, a change that contributed to the collapse of Silicon Valley Bank and has raised questions about the situation at other firms. The Swiss National Bank on Wednesday said it was extending up to £44 billion in emergency funds to troubled lending giant Credit Suisse, which was seen as vulnerable in the wake of the U.S. bank failures. Its shares bounced back more than 15% after big falls a day earlier, while major indexes across Europe also gained. Central banks around the world have been sending a message that such problems will be contained locally, and Sir John Jeeve, former deputy governor at the Bank of England, said that in Credit Suisse's case, the Swiss National Bank's action was likely to be enough to stop the crisis spreading. However, Credit Suisse has faced a string of scandals in recent years, including money laundering charges, spying allegations, and high-profile departures, and lost money in 2021 and 2022, warning that it does not expect to be profitable until next year. Customers pulled millions of dollars from the firm in recent months. Overall, concerns about the health of the banking system have spread globally, raising fears of a crisis. Central banks and financial officials have been working to ease these concerns, but the situation remains volatile, with banks injecting emergency funds and regulators guaranteeing deposits beyond typical limits in an effort to head off further runs on bank deposits. Thank you for watching. Don't forget to leave a like and subscribe to the channel for more content like this.